For a long time, one of the most common ways people saved money was to hide it somewhere safe. Think about a piggy bank. The roof, or in some cases, in the ground. I will share with you 5 reasons why we should rethink piggy banking and the culture of stashing cash. The last one is the most important, so stick with me till the end. Historically, this made a lot of sense. Banks weren't always accessible, trust in financial systems wasn't guaranteed, and physically seeing money helped people build financial discipline. Even today, piggy banks are still a great tool for kids. They teach patience, delayed gratification, and the habit of saving. But let's take a step back and ask, is piggy banking and stashing away money actually safe and effective? What are some of the risks? Let's start with you. There's the risk of something happening to you. Hidden money depends on one's memory. We all are not strangers to forgetting where we hid our things. Your stashed money is not exempted. Illness, stress, aging, or just time can cause people to forget where money was hidden. A system of savings depending entirely on memory is fragile. Money hidden too well can turn into money that's effectively lost. Even worse, if someone passes away and no one knows where the money is, the money may never be found. And even when it is found, however long it takes, the currency itself may no longer be legal tender. Second, there is physical damage. Cash feels safe because you can touch it, but physically, it's one of the most vulnerable ways of storing money. You are exposing your money to fire hazard, water damage, termites, mold, and decay. Once physical cash is damaged, there's no replacement and hardly any recovery process for it. Third, accessibility. Cash retrieval is not as accessible if you are away, except you want someone else to know about your cash deposit. If you suddenly need the money, say for a medical emergency or something time sensitive, you have to physically go get it. Emergencies don't wait. In moments like that, access to your money is crucial. Fourth, security. Cash stored at home has minimal security features compared to the alternatives we have at our disposal today. If there's a burglary or armed robbery, the loss is immediate. Now, let's talk about the quietest risk of all: inflation. Imagine you save $1,000 in cash and kept it for a year. If inflation averages about 5%, which is very realistic, that same $1,000 will only buy what $950 used to buy 1 year earlier. You didn't spend or misuse your money, but its purchasing power declined. You feel good about your discipline, but your money sure doesn't feel good about how you kept it idle. Cash that sits idle loses purchasing power over time, while money available today can be put to work. To be fair, every savings method has drawbacks. Banks have risks, investments fluctuate. No system is perfect. But exposing money to physical loss, thefts, forgetfulness, and guaranteed loss of purchasing power is a very high price to pay. The principle behind piggy banks, discipline, consistency, emergency readiness, is solid. However, keep money where it's more protected, accessible, and meaningful over time.
On this channel, we talk about personal finances and lifestyle, so please consider subscribing to the channel if our messages resonate with you.